Hello traders, this is Ace here. Today I want to walk you through a trade that I took yesterday. What we're seeing right now is a 15-minute chart of NQ from yesterday, and the narrative was pretty simple. We had a movement down, we had a big BC down below us that it was our drawn liquidity, and our narrative was short. As we see, at the beginning of the day, we've traded higher. It seems like London made the high of the day. We had SMT with YM or ES, I don't remember, but we have SMT and we started to reverse. And I would expect us to tap, this is before market open. I expect us to tap into this CBN breaker and reverse downwards. But, you know, taking an entry up here would mean that I would have to put my stop loss up here above the breaker or at the high, and it's a little bit more risky. So I've used inversion fair value gap to refine my entry. So let's have a look of what's happened. Basically, we have buy side liquidity here. And the reason why I like this CB is because we have an inducement. We have a liquidity right beneath this CB. Okay. And when we drop down into the 1 minute, we see that at market open, we started to trade downwards to take more liquidity from the down. And again, I'm being patient here. And I see that, we hit the CB. I'm not taking an entry yet, but I'm marking the fair value gap that pushed us into this CB. I want this fair value gap to be invalidated and becomes an inversion fair value gap. So I'm waiting to a candle closure beneath it to enter the trade with a proper risk to reward here. Almost. Look, this candle almost closed below and traded upwards. Be careful, guys. This happens a lot. At the end of the candle, the manipulation happens and the reverse. You need to wait for candle closure beneath the inversion fair value gap to make it a real inversion fair value gap, and don't fall into the trap of the manipulation. And by the way, we have a liquidity up here as well. So we took liquidity, we took another liquidity, and then we traded downwards. This fair value gap that will be inverted is basically on the manipulation leg. This is why it's important. The fair value gap on the manipulation leg, once it becomes inverted, it becomes an entry point for us. We took more liquidity from the upside, and then what we see is that we close below. This is our entry. So we take a short here. Our stop would be up here at the candle that broke the inversion fair value gap. We enter in a market, and our target can be a fair value gap down here. And the last target would be down here. As we can see, the graph made a super fast movement downwards, give us all of our targets eventually. This one was great, 122, and this one 1.338. And this is it, guys. Wait for a tap on the fair value gap on a higher time frame, wait for inversion fair value gap on the manipulation, and then enter here. That's it. Thank you, guys. Hope you learned something.